The last part of this training, we show you the common frequently asked question. There is several question and answer. You can read by yourself. The first question is how to read the stock valuation chart. As we mentioned it, we explained you before. So you can repeat it by reading this answer, so you can find your satisfactory answer on how to read the stock valuation chart. Question is asking about when is the low value used and when we use the value of high. So we already explained to you during the bearish condition, we have to be think more conservative and we use the low value, which consider the long-term debt in our calculation. But in time of bullish, we can be more optimistic about the market and we can use only for the high value. The next question is, what is the benefit of the stock valuation calculator for the investor? Well, basically, as we discuss it together and we explain it through the previous chart, you can see the benefit. The next question is, again, what the benefit of the stock valuation calculator for a trader? Well, trader who has the characteristic short-term investor, we recommend you to make the stock selection, and the decision to trade is you can use the technical analysis chart. And the next question is stock valuation calculator guarantee profit for the investor? I think nothing in this world guarantee you for your wealth. Next question is SVC accountable and trusted for its accuracy? Of course. This formula is taken from the book, the classical book. Some people call it the Bible of the investment. Security analysis written by Benjamin Graham and David Dodd, the professor of Columbia University in the old days. And then he's a mentor and teacher of the Warren Buffett, the third richest man in the world in the last 3 years. So the formula is combination of free cash flow and liquidation value updated quarterly and every day using the market sentiment and the government bond yield. And then as you read a book about Warren Buffett, or in a Warren Buffett speak written by Janet Lowe, Warren, he himself believed that Benjamin Graham method is accounted 85% of his calculation, of his decision to make a trading, and the rest is Philip Fisher. The next question is, are financial report are basis for the SVC can be trusted? Of course. It is issued by the stock market authorities, especially for the Q4 is audited by the reputable public company firm, public accounting firm. So I guess this can be, how else if we don't believe what the authority issued. The next question, what are advantages stock valuation calculator over technical analysis? Well, as we explained before, technical analysis is depend on the previous transaction. Technical analysis cannot be used for IPO stock or illiquid stock. So technical analysis doesn't care about the fundamental of the company, the financial performance. So the stock valuation based on the fundamental analysis is the real one, the real performance of the company. And the next question is how to read fundamental and technical analysis at the same time to make a decision. As we said before, we explained that the combination of the technical analysis and then stock valuation calculator chart. So basically, we can pick the right stock to buy or to trade, and we execute using the technical analysis chart. Okay, next question is people generally asking us, is that company performance already represented in the market price? Well, market price being formed by the sentiment of the market, the emotional of the trader. So the price represent the fundamental, maybe yes, maybe no. It's not necessary yes, but basically price driven by something happening in the company, in the stock represented by the company. So I guess price will follow what's happening in the fundamental. But later on, here is a market sentiment. But the prime mover, the first driver, must be fundamental. The next question is how big chance of the company, of the investor to succeed in using SPC? Well, it's better for you to study the trend comparing to the historical price. So the success would be more than 50%, especially for the big cap, blue chip, and medium cap stock. But still difficult to apply to the small cap, because small cap is tend to be more speculative than the big cap. Next question is, what does it mean, the negative intrinsic value? As we said, as we explained, that low intrinsic value sometimes below zero or negative. In this case, we cannot analyze actually the negative number of the intrinsic value. So basically, the negative number is on the balance sheet, because balance sheet they have the debt level mostly above the net current asset. It doesn't mean that the company with huge debt, with the deficit in balance sheet, is not good. No, the answer is no. As long as the free cash flow keep growing and the average company growth is above the average, we can prove in the calculation the net or the intrinsic value at the end is positive or close, even close or above the market price. The question or the next question, is it worth to buy stock with negative intrinsic value? Well, intrinsic value consists of the high and low. I would suggest, if high intrinsic value is negative, better to stay away. But if the negative part is belong to the low intrinsic value, you can consider to keep or keep watching, or if you already buy it, maybe you can hold with the hope that next financial performance gets better. The negative intrinsic value, if high intrinsic value is still positive but low intrinsic value is negative, maybe the company need to, or the investor need to wait or watch the next performance, how profitable the company to employ the capital expenditure. Because if the company can manage the capital invested to produce satisfactory return, which is positively enough to cover the negative or deficit in the balance sheet, is still considered good. And the next question, why gap between high and low, in some cases very far, and there is also the company with no gap. As I told before, the banking industry, insurance, property, security companies, we get their all financial report. They don't split where is the long terms and where is the short term debt. So we cannot, and we don't know. Well, it will be a lot of work to split it. So we just tend to be conservative. But if you see in our stock valuation, the industry in the banking and finance is still considered good because they still either undervalue or undervalue. If they are overvalued, there is no big gap. There's only little gap of the with the price. The next question is about the key factor in the SVC. What is the most important or key factor determining the change in intrinsic value? As we said before, the internal factor being the most important is the revenue average growth. The next one would be net profit after tax, capital expenditure, and etc. The external factor being the government bond yield. Margin of safety, basically we use the same all the way 30%, but government bond yield is depend on the average condition of the country in general. The higher yield of government bond represent the higher risk of the country perceived by global investors. So they need the yield big enough to consider their investment into the country. But if they are confident about the country risk, they don't ask the higher yield to put the money or the investment into the country. So the next question is what the strength and weaknesses. The strength is basically free cash flow is represent the reality of the company performance. And using risk-free government bond yield as a factor, we can tell that what is the country perceived by global investors. So SPC also consider what is accounting tricks, window dressing, malpractices. So here is the real and then objective calculation based on the fact. Even sometime, however, that information reported in the financial of the company may not be correct after all. Sometimes they can hide. So this is beyond our calculation. What we see is what we get in the financial report. So we cannot go beyond that because we have no time to investigate. What we investigate is a financial report. This very simple thing that we can suggest to you that if you are not comfortable with it, and then you can pick as many stock as you can. You don't fall in love with one stock. So the weaknesses is sometimes we lag behind because we cannot use what has been reported in the newspaper, in the television, but we have to see the real report, the long list, and not the short list. So we may be lag behind, but what our philosophy is in the long term and not investing in the short term. So at the end of the day, if we confident that the company performance is good enough and the price is undervalued, so I guess the price will picking up in the later days or later weeks. But we need to consider the trend in the last 3 years at least, how the trend being formed. If consistent and stable uptrend, so we have to consider to hold. The next question, is it stock valuation calculator is better than the other fundamental analysis such as P ratio, price, book value, discounted cash flow method? Well, those analyses ignore some important point like capital expenditure, interest expenses, and tax are real costs, so they have to use net income after tax, not EBITDA. Next, this net current asset. In the banking side, we already calculate non-performing loan. Not only the loan that already collapsed or lost, but also concerning special attention, substandard, and doubtful. We also consider advance and prepaid gain and loss, security held to maturity, and also we consider the length of the receivable turnover. If the receivable turnover over 90 days, so we consider it as the risk, so we put the risk in our calculation. Next one, free cash flow. We ignore the market sentiment because some non-recurring income and losses cannot or hardly considered by the market, so it's like hidden in the financial report, even though the company is openly declared, but I think few people put attention on it. So SVC approach is bottom up, start from the internal company and projected by external factor. Unlike the other analysis used with top-down approach like capital asset pricing model, they use the top-down, but we use the bottom-up. The next Question will be difficult. The target price on the SVC sometimes differ from the target price in the research report from securities company. Why does it happen? And which one should I choose? So there is a very difficult question because we don't mind to attack other party, but we have different approaches, we have a different philosophy. Every approach has different target price because it uses different assumptions. So we only can tell you that SPC use at least at least 9 parameters. In the 9 parameter, government bond yield, average revenue growth, net profit after tax, non-recurring income and losses, capital expenditure, short-term and long-term share issue, dividend, depreciation, margin of safety. So it's more than 9 actually. If we use the government bond, so we consider interest rate, inflation, we consider country risk, we consider exchange rates against the hard currency. So we can try to tell you that we use almost the important factor of the company ratio. Next question would be, why in some cases intrinsic value never touch price level? Okay, this again difficult question. I think it happen mostly in the medium and lower or small caps stocks. Actually, market price from by at least 4 factors: macroeconomy, fundamental company performance, market sentiment, and the liquidity of trade, including number of shares controlled by certain group forming a cartel. Intrinsic value SPC take into account company fundamental and macroeconomy, which is government bond and industry average growth, and not other factor, because we can control just only two factors externally. Therefore, in short term, several stocks do not represent their true value. Special attention to the blue chip and big cap. Usually, intrinsic value finally ever touches the price line, and you can check in our chart. You can learn and then check the history of the stock valuation in the stock. So then you can answer this question. So next question is, why are the majority value transaction coming from mostly foreign securities? As you see in the statistic in the first slide of this training, I think it's more than 60 or almost 70%. The value transaction in Indonesia stock market in the last 10 years dominated by foreign investors. Well, Indonesian market, especially the player in the market, is, I would say, is just follower. They are lazy to learn. They are lazy to study the fundamentals. We don't say that the qualitative fundamental, but quantitative in terms of financial report, the numbers, the crunching. So they're quite lazy. They are lazy to learn that. So just follow what's driven by the market. So easy as a target for the foreign company. I have strong belief that the foreign investor, they use the same method as us. They just execute very quietly and step by step, slow but sure, but they have a different tricks strategy, so it's not easy to be read in the market. But after they make some buying enough for them, so they start to make a noise in the market, like throwing a news, throwing sentiment, make the trading quite often, put the bigger money in the market. So the market will form, and then the trader will follow. When the followers is big enough, they dump the price, they dump the stock, and then sell out, and then take a profit. So the next question is, which one first in creating price movement, technical or fundamental? Well, I think we cannot discuss this issue here, because market makes decision of many consideration. Well, but I have a strong belief, especially what's the positive effect on the financial performance of the company is easy to make the price movement, or the other way around. If the positive performance of the financial of the company is also cause the drop in price. But people may ask the question is, why what we produce or what we promote is already out of date? It's very simple, because some people got the information much earlier than us. They got the information before it's being published by Indonesian stock market authorities. So I don't mean to say they are insider trading. There is no proof on that. So they move a lot faster and earlier than us. But in our philosophy, we don't invest for the short term. We at least invest for the next 3 months, because we do diagnose, we evaluate in every 3 months what the company performance. Okay, thank you for your attention, and hopefully it will be useful, and then you can make a move in the Indonesian market. Thank you very much. Bye.